Yo, it's Sunday morning. I'm about to go watch the NFL games, but first I'm gonna go to the gym because I need my exercise first. And then we are going to watch the NFL games. And I have a $200 parlay. It's 4 legs that I could potentially make $2,000 with. I don't usually do this, it's just for fun. But yeah, I'll let you guys know how that goes, see if we're breaded up by the end of the day. All right, peace. You guys rocking with the new Drake album? I ain't gonna cap, man. It's pretty fire. Don't mind the hair though, but it's pretty fire. Yo, do you guys see that? You see how beautiful those mountains are? That's insane. Come on, man. That's beautiful. I know y'all are trying to get out to the mountains. All right, yo, I forgot to say that these guys, the parlay that you're about to watch, the one that they didn't hit on, is different than mine, so I didn't lose money. But they ended up going like 0 for 4 on that day, and they ended up kept trying to like make the money back that they lost because they were super excited about making a lot of money on the first one, and then they lost, so they just kept going back in. That kind of relates to over trading, because trading is gambling. They were gambling. Same type of thing. For the parlay. For the parlay. Oh. Oh no.
Jets trying to stick with him. Oh! Allen tosses deep ball on the way. Oh! Complete. Oh my God! And the Jets will win it. A shocking victory.
For the parlay, man.
Yeah, man.
For the parlay, man.
The days will get better.
Okay, what's good? So I thought I would update you guys. If you haven't seen the TikTok, or you probably have seen the TikTok already because this is going to get posted on Wednesday, but I'm in a 4-leg parlay. 3 of the legs hit, and I bet $200 to make $2,000. So I just need Derrick Henry to get 80 rushing yards, and then I'm locked in. I made 2K. And then if I do make $2,000, because this was just play money, I'm going to go to the mall tomorrow and spend a little bit of it, get myself a little present if that does it. If it doesn't, no shopping spree. We're gonna be safe with our money. We lose money, we don't go out. We make a lot of money, we go out, spend a little bit of it. The rest of it can go into some investment stuff. All right, yo, so the parlay ended up hitting. Derrick Henry had a lot more than 88 yards, so you know what that means. 2K hit the bank, or it hasn't hit yet. It still says like in progress on the app, but tomorrow morning it'll probably hit. I'm about to go withdraw some cash, hit the mall, go to probably City Creek, maybe like go to Louis V, or maybe like, I don't even really like that stuff too much, but I'll probably go get something cool, like maybe a North Face jacket because it's about to get cold here, or maybe like just a vest. But yeah, I'm about to go shopping, so that's about it. All right, yo, what's good? It's Monday morning. We just got into a trade. This is actually our second trade, but the first trade, you'll see later on in the video. The first trade, I risked 0.25%, and then I ended up cutting it when I was down 0.1%. So I'm not really even counting that as like much of a trade, but this is the trade that we just took, okay? Take profit 1, take profit 2, take profit 3, take profit 4, okay, and then I'm waiting. I just entered on the break of structure off the 5-minute right here, okay, and I'm waiting for potentially a second entry. I risked 0.5% on this trade, and if it comes down to our second entry, I'll put in another 0.5% to try and get things cracking, okay. Hopefully you guys are enjoying the video. But yeah, that's about it for now. All right, yo, what's good? So remember when I said I just took my first trade? Well, we ended up taking 4 trades and we went 4-0. The reason why I took 4 trades, you know, don't hate me for over trading, right? Was Market was kind of whipsawing today. This is due to daylight savings. Happens every single year. The first week of daylight savings, everything's kind of out of whack because like literally traders will be like, oh yeah, like it's daylight savings, or they'll just forget about it. Either way, messes up the market a little bit. So we were whipsawing. I hit four trades for wins, okay? We can pop them up on the screen. 1, 2, 3, and 4. They all only hit take profit 1, so not a lot of profit today. But since 4 take profits were hit, I ended up closing at 2.5% gain on my account for the day. And I want to get another trade in because I want to catch today's runner. But we'll see if that ever comes. Okay, so 4-0 right now, up 2.5 on the week. Yep, throw up the screenshots of them hitting, right? I took off 50%, I take profit 1, moved the stop loss to break even. So very small profits today that ended up adding up to a decent amount, which is why I always tell you guys to secure your profits. All right, that's it. I don't even know what I'm going to do today. It's 8:45 right now. I'll probably head to the gym pretty soon, but yeah. All right, yo, it's Tuesday. I just took my first trade and my only trade for today because I kind of overtraded yesterday. We took 6 trades yesterday. I went 4 for 2. And I stopped trading after the second loss. I lost 2 in a row. Should have just cut it at 4. But I wanted to get a runner, but yesterday was super choppy. Anyways, today is Tuesday and we got a really good trade. We already hit 3 of our take profits. As you can see here, this was our entry right up here. Okay, we hit take profit 1, 2, and 3, and I'm holding a runner with my stop loss in profit over here. And hopefully we can come down all the way over here. And I'm honestly looking to hold this trade extremely long term because, let's zoom all the way out for us, because look at this, we had a break of structure on the daily and this is poked right above equilibrium. We shorted right up here. Might as well hold this all the way down here. Am I right? Okay, but other than that, that's kind of it. This video should be wrapping up pretty soon. I don't even know why I said that. But yeah, that's pretty much it. I'll catch you guys. Okay, what's good, guys? Welcome to the Break of Structure YouTube video. Okay, so today's YouTube video is going to go over Break of Structure. All right, and most of you guys have this pretty down, but there's some things that you guys just don't understand with Break of Structure that hopefully I can cover for you guys today, because I know as a beginner trader versus what I know now, Break of Structure is a just whole different concept for me. And if you guys think I'm going to explain change in character in this video, I am not, okay? I do not trade based off of change of character. I think it's kind of dumb, okay? But either way, we're going to go over Break of Structure, and then the next video, we're going to go over Equilibrium, because I wanted to have these as 2 same videos. I know last video I was like, yo, I'm going to do Break of Structure and Equilibrium. You're going to learn about it. I feel like a lot of people have been asking about Break of Structure, so I want to give it the time that it deserves, okay? And then the next video is going to be on Equilibrium. Don't get mad. They're all going to come out pretty soon, okay? I'm trying to get videos out within, like 3 to 4 days for you guys now. I'm really trying to get on this YouTube grind. Okay, so let's go over just the basics of Break of Structure first, okay? Right? What do we have when it's an uptrend? Higher highs and higher lows, okay? So it looks something like this, right? Okay, and then downtrend is the opposite, lower lows and lower highs, okay? So it looks like this. Right? Okay, so this is uptrend, right? Up structure, and this is down structure, right? Pretty simple, right? Everybody learns this when they first start trading, right? Buy low, sell high. You guys know the deal, okay? But what happens when we get a break of structure, right? A change in market direction. Let's say we're in an uptrend, right? Like this, and then boom, this low gets taken out, right? Now we're in bearish structure, right? Once we break this low, we have now broke structure, and now we are bearish, okay? Okay, versus being bearish and then breaking structure to the upside, right? If we break structure to the upside and we close above a high, we are now bullish, right?
versus if we break structure to the downside, we are bearish, okay? So once we get into the actual chart portion and not me just drawing little beautiful lines on the chart, this will start to make a little bit more sense, okay? So when people talk about market structure, okay, I think, like, okay, let's do an example here. Okay, this is what someone will draw, okay, and it drives me crazy, okay? They'll be like, we're bearish, like this, right? Like, yeah, obviously we're bearish by looking at this. This is like what everyone sees, okay, but this is not market structure. This is not the current market structure, okay? If you want to do that, go to the monthly chart and draw it out like that, okay? Because that shows the actual market structure that we are in. The monthly chart shows that market structure that we drew out on the daily time frame. If we go back to the daily time frame and we were to leave those drawings on there, that does not accurately represent what all of this market structure is. Because if we go on the daily time frame, I see, okay, break of structure to the upside, break of structure to the downside, okay? Continue down, break of structure to the upside, break of structure to the downside, break of structure to the upside, break of structure to the downside. There's so many different structural changes within this that you cannot just classify, ooh, it's down, it's going down. How are you going to take a trade off of that? You don't know where the market's going to go. You can just confidently say, we're bearish. Okay, I want to be able to tell you guys, I want you guys to be able to know, break of structure, boom, we're bullish. This is where I'm going to go. This is where price is going to go. And then once it hits that point or this point, and then we get a break of structure off of that, we're going in this direction. Okay, I want you guys to know the market like the back of your hand. I want you guys to be able to open a chart like this with zero indicators. I'm sick and tired of hearing people talk about indicators. I want you to open a daily chart and be able to look at it and tell me, okay, we had a break of structure to the downside. We're now targeting this low. Okay, because we are. Okay, this low will be first, right? We already took out this one, right? Because this was the break of structure. This one's next, onto this lower liquidity. Okay, I want you guys to be able to go on your friend's computer and be like, want to see something cool? I can tell you where Bitcoin's going in the next 2 months. Okay, because that's the point where I'm at. Okay, and if you aren't able to do that, okay, maybe you get profitable within like the first, like you have like 3 months of profitability, but you aren't completely there yet. Trust me, you will get there because what comes with profitability comes with just knowledge within the market. Okay, you are not going to be profitable trading EMAs crossing. You are not going to be profitable just sitting there and using the Mamba FX 5-minute breakout strategy. Okay, that you are not a day trader if you do that. You cannot look at a daily chart and tell me where it's going using indicators. Okay, indicators are lagging. The human brain, me looking at current price action, that is not lagging. Okay, now that my rant is done, let's get into this. Okay, so we just outlined what an actual break of structure is, right, using our pretty little paintbrush. Okay, now we're going to do the same thing with our pretty little paintbrush, but we're just going to outline it, okay, on the chart, okay, like this. Okay, everyone should do this, okay? Each blue candle is an up move, okay? You have to highlight each blue candle, okay? So this is what it looks like. All right? So I wish there was a way for me to make it so the candles just disappeared. There is a way, but I think I can just drag this. Okay, perfect. What does this look like? Okay, high, high, break of a low. You guys can literally do this until you get comfortable spotting it within the market. There is no shame in doing this. Okay, low gets broken. Okay, we move up. This is our high. Low gets broken. Okay, come up, high, low gets broken, but then what happens? Change in market structure. We break above this high, right? We came up, came down, broke through this high. That was the high that we outlined, okay? So now we are bullish on this, okay? And then what happens?
The low gets broken, right? Right here, break of market structure. Okay, let's get rid of these. Break of market structure. What does market do? Continues bearish, right? Continues bearish until right here, break of market structure. Okay, I want you guys to do that on a long-term trend. Okay, we'll do it again right here. Okay, you're just following the candles. I don't care if there is one single blue candle, you are going to mark it going up. Okay, because that's what the blue candle signifies. It represents a move up. People that don't mark out blue candles going to the upside, as like market movements, you're losing price data. You're invalidating price data. Okay, so let's look at this. All right, high, lower high. Okay, lower low, lower high, 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 lower low, break of structure. Okay, high, high, even lows, break. This is what we outlined. This is the break of structure. It's the same thing right here. Okay? All right, now that we know how to trace candles, we are going to put that to work. Okay? So, in order for a break of structure to be valid, okay, we need a candle closure below the wick, not the body. It actually drives me crazy when people do not understand this. This is the low. The wick, the very last pip is the low. And the candle has to close below. It can't wick it. Okay, it cannot wick it, because I can show you for example, okay, we trade liquidity sweeps. Okay? Right? A liquidity sweep is pretty much just a wick above a high and then moving down. The wick above the high, the wick moving up, all the retail traders are going buy, 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 buy. No, we see that wick above, we know that it's not a break of structure. Right? Until it closes above that high, then we can get confirmation. Okay? If we go over here, look at this. Okay? While this candle was forming, while this 4-hour candle was forming, at some point in time, this candle was a full blue candle all the way up here. You cannot tell me that retail traders saw high, low, right, break of structure, and then come down, and then boom, a massive blue candle. You are not telling me that retail traders see a 4-hour blue candle encapsulating this high and aren't spamming buy. But look what happens. Do we get a break of structure? No, it's just a wick. Okay, continue down. Same thing right here. Do we get a break of structure? No, it's just a wick. Okay, so when we're looking for trades, we have to use this to our advantage. Okay, where's the break of structure to the downside on the 4-hour? This is our low. Okay, let's zoom in real close. Broke structure on this candle because we close below this low. This body close is below this low, so we are bearish. Okay, what can we do? Find potential entries. Okay, fair value gap. Would you look at that? Filled it in perfectly, tanked. Okay. All right, same thing here. Okay, push up, right? Did we get a close above? No, right? Move down. Okay, on this. Okay, this one's actually ugly. I'm going to do this, remove all these drawings. Okay, move up, move down, move up, move down, move up. Okay, where is our low? This is our low. Okay, where do we break structure? On this candle. Okay, what does this candle to the upside look like? It looks like a liquidity sweep to me. Okay, boom. We broke structure to the downside, we sweep liquidity, we continue down. Okay, I'm going to show you guys how we can use break of structure on high time frame, right, to find entries and to find our bias. Okay, so if we're on the daily chart, okay, what do we notice about all of our weekly significant highs? Well, I'll give you a hint. We get a break of structure on the daily time frame to indicate that we're moving up. Okay, boom, move down. All right, break of structure to the upside. All right, we make these highs. All right, on the weekly time frame, this was a wick above, right? It was not a break of structure. On the daily time frame, is this even a structure break? No, because this is the high that we're talking about. This is the low that we're talking about. We don't care about these highs. If we want to talk about it, we can go into the weekly time frame. Oh, would you look at that? Just a liquidity sweep. Okay, let's go back to the daily. All right, so what encapsulates for us a potential move up for higher structure being built on higher time frames, right? We can do this for the daily, right? Showing like retracements on the weekly, right? The daily, what do we get? Okay, move down, break structure to the upside, we made a weekly high. Move down, break structure to the upside, we made another weekly high that did not break this, right? We already showed that on the weekly time frame. Continue down. Okay, when do we know the down move is going to come? When we break structure to the upside. Well, that's freaking easy. Find break of structure to the downside. We're bearish on the S&P 500 right now. Okay, how do we know when price is going to return bearish? Easy, break of structure. Okay, what happens? Boom, we come up, come down, close below here. Okay, break of structure down. Okay, it's that easy. Okay, continue down. Do we get a break of structure here? No. Come down, do we get a break of structure here? Yes, we do get a break of structure right up here. Okay, if we go into the weekly time frame, okay, this is what it looks like. Okay, move up. Okay, we break weekly structure right here. Okay, but what does that mean? Monthly. Did we break structure? No, we're still bearish. Okay, come down, break structure to the upside again. Okay, what are we going to target? We're targeting areas of liquidity. Okay, we're finding, all right, we're going to learn this in the next video, equilibrium. Okay, where's the equilibrium from this swing high to this swing low? It's going to be at the 50% mark. Okay. Okay, how do we know that we're going to return bearish? Okay, if we track this, okay, up, down, up, down. This low wicks these lows. Does that mean it's a break of structure? Absolutely not. Okay, we continue to the upside, continue to the upside, continue to the upside. Where is our break of structure? Easy. It's right here. Okay, boom. Capitulate down. Capitulate down. What do we get here? Break of structure to the upside. What does that tell us? Okay, it means we're moving up. Okay, come down. Do we break this low? Do we break structure down? No. Okay, we're still bullish. Okay, move up, move up. Now what happens? Break structure to the downside. Now what are we looking for? More downside capitulation. Okay, so that's high time frame, how we can use break of structure to our advantage, right? During this whole week, I was bullish up to these levels and to equilibrium because I saw this break of structure, right? And this break of structure, okay? That is obvious bullish confirmation for me. Okay, so what was I looking for? Okay, I was looking for areas of liquidity like right here, potentially all the way up here, this fair value gap, and I was looking for it to react off of it. What did it do? This liquidity, boom, took it out, broke structure. So now what are we saying about this? Bearish. Okay, now let's get into how we can use, right? So that's how we can find our bias on high time frame. Okay, now let's go into the 4 hour. That was on the daily and the weekly and the monthly. Okay, now let's go into the 4 hour. We're getting more into day-to-day type of things. Okay, what do we have here? okay? This is a high. Closure above. Remember, we are bullish on the daily time frame due to this closure above. We don't close below here on the daily time frame, so we're still bullish, okay? So we're looking for more bullish confirmation on the 4 hour, right? Because we broke structure down here, we're bearish on the 4 hour now, okay? What are we looking for? We're looking for a break of structure to the upside. When do we get it? Boom, right here. What can you do? Okay, find an entry. You can easily just enter off of this, okay? Target previous areas of support and resistance. Boom, done. That's how you swing trade the S&P. Okay, this strategy is applicable to every single time frame and every single chart. I've been saying this from the jump, okay? All right, so we break structure to the upside, okay? Then what happens? Okay, move up, move down, move up, break structure to the downside, okay? Scale down. 1 hour time frame, okay? We're still bullish on the daily and the 4 hour, okay? Okay, what are we looking for? We're looking for a break of structure to the upside. Okay, we come down, move up, make another leg down. This is our high. Okay, come down, move up, make another leg down. This is now our high. Okay, long the break of structure. We close above it right here. Stop right here. Target previous areas of support and resistance. First target here. Second target all the way up here. Third target all the way over here. Okay, we're running this up. Okay. Okay, when do we get a break of structure on the 1 hour? Okay, move up, move up, move up, move up. Okay, break of structure right here. Oops. Break of structure right here. Okay, what do? Scale down into scale up into the 4 hour. See if we have any other confirmation with that. Okay, we see nothing so far, right? We don't see break of structure on the 4 hour. We're not confident that it's going to go down yet. Okay, what do we get? Closure below here. We close below. What's most likely going to happen? We're going to dip lower. Okay, so what do? We scale down into smaller time frames. Okay, and we try and find a break of structure to the upside after the low has been made. Okay, first one that you could do. Okay, do we break this high? No. Okay, we break this high, right? But we broke structure on the 4 hour to the downside, so we're bearish. Okay, so we're waiting for break of structure to the downside on the 1 hour. All right, broke structure to the downside on the 4 hour, right? We're probably going to break structure on the 1 hour to make a retracement. Okay, what do we wait for? Break of structure on the 1 hour, boom. Okay, short it, but we're not shorting that because on the daily, we're bullish, right? We need to use everything in confluence with this. Okay, on the daily, this looks pretty freaking bullish to me. Okay, so we're not looking for shorts. We're looking for buys. Okay, so this break of structure, we don't care because on the 4 hour, on the 4 hour, did we break structure to the upside? No, we did not. Okay, when do we get a break of structure? Right here. Break of structure on the 4 hour, we're continuing the daily trend. Okay, scale down into the 1 hour. Okay, we start breaking structure to the downside on the 1 hour. What are we waiting for? Break structure to the upside so we can continue. Okay, this is the high. I literally remember taking this trade. This is the high. Closure above on this candle. Okay, what do we look for? Some sort of entry, right? We have fair value gap in here. We also have order block. Bullish order block right here. We can also just enter on the break of structure. Let's say we get in long at the fair value gap, right? Okay, stop under here. What do we target? Previous areas of support and resistance, previous areas of liquidity. Okay, right here's take profit 1. Right here's take profit 2. Okay, we're still bullish on the daily time frame, so we think this is going to continue upwards. Okay, take profit 3 right here. Take profit 4 right here. Take profit 5 all the way up here. What does it do? It gets freaking hit. Okay. Okay, now we're continuing bullish. Okay, now we go back into our 4 hour. Okay, what are we looking for? We're looking for a break of structure down in order to, right, get a retracement. Okay, so what are we looking for? Okay, up, down, up, down, up, down. Do we get a break of structure yet? Nope. Okay, boom. Here's our break of structure. Okay, boom, boom, close below. Okay, what are we looking for? Scale down, lower time frame. Okay. we're looking for hourly confirmation to the upside. Or we can wait, be patient, right? Wait for 4-hour confirmation, okay? We come down, this is our new high. What do? We close above. What do? We try and find an entry off of it, okay? Where's an entry? Well, we could have entered off of this break of structure, right when this candle closed, or we wouldn't really be taking a trade, right? We don't even ever get a retracement down into here, okay? So that's one that you're just going to have to sit out, okay? Let's keep moving. 4-hour, okay? We had this move down, move up, okay? What do we get? Break of structure on the 4-hour. What are we looking for? We're looking for still buy side, okay? Break of structure on the 4-hour. We're waiting for break of structure on the 1-hour. Do we get any break of structure? Nope. Up, down. Continue breaking structure, okay? We break structure down. Massive wick up. Massive wick up. Remember, we were bullish on the daily. We continue to be bullish on the daily until a low gets closed below, okay? This is the low that needs to get closed below in order for us to flip bearish on the daily time frame, okay? So during all this time, we're still looking for buys until this low gets violated, okay? Do we see any break of structure to the upside, even on the 1-hour? No, I don't see anything, okay? Until we close below this low, right? What did we do? We broke structure to the upside. What does that mean? Scale into the 4-hour. What are we looking for? A retracement on the 4-hour, okay? What do we get? Boom, a push up. Now we're looking to break structure to the downside, okay? So now we just scaled that down from the daily and the weekly, now to the 4-hour and the daily, okay? Now we're going to get into the 1-minute break structure and how we can actually enter. Sorry for the break. I was just uploading a video, unfortunately, and it stopped me mid-sentence. So let's get back into it. We talked about how we can find break of structure on the 4-hour, the daily, the weekly, the 1-hour. Okay, now we're going to show you how to take trades off of it. Okay, we're going to scale down to the 1-minute time frame, right? Because that's what I trade off of. Okay, these were the areas that I marked out before getting silenced by the video uploading. Okay, so this was our sell side liquidity. This is our sell side. This was our buy side. Okay, right? What liquidity gets hit first? Our sell side liquidity, right? This is New York Stock Exchange open. Okay, so what are we doing? We're looking for the highs, okay? Once we see this candle sweep, we're instantly hawking for highs because sell side liquidity got swept. We're going to push to the upside, okay? So what do we see? This is the most previous high to this liquidity sweep, okay? Then what happens? All right, boom, move down, move up, move down. What is that? It's a high. This is now our high, okay? What do we get? Closure above, okay? Now what are we looking for? Fair value gap, boom, okay? Or just enter purely off the break of structure, or enter off of an order block like this, right? Tapped right into that order block, okay? That's your entry, all right? Once you get a liquidity sweep, then you see break of structure on the 1-minute time frame. Those are your indications, okay? Let's do one more. I know this video is getting long and you're probably sick of me, but let's do one more. Okay, that wasn't super accurate, but just going to the 1-hour so I can put on our stuff. Okay. All right, so for this, I don't really see anything, but yeah, so for a sweep of liquidity, this isn't really a great great one to do, but I do remember making money off of this trade. But there was a reason I remember taking this trade. Okay, so whoa, how do I get rid of this? Okay, there we go. Okay, so there was a reason. There was something in here. It was like a 4-hour fair value gap, right, that we had tapped into the 50% mark of it. So I was looking to be bullish if we saw a break of structure to the upside. Okay, so we tapped into it right here. All right, what do? Get our little brush tool out. Okay, up, down, up, down, up. Okay, so this is our high right here. Okay, what do we get? Magical break of structure to the upside. Okay, what are we looking for? Fair value gap entry. Are there any fair value gaps in here? No. Okay, so enter purely off of break of structure. Okay, where are we going to put our stop loss? below this, right? Because this was the 50% hit of our fair value gap on the 4 hour. I'll mark it out for you after this trade plays. But okay, where are our first take profits? We could do take profit 1 here, take profit 2 right here. Okay, take profit 3 right here, take profit 4. We can do like take profit 4 above these highs, right? Something like that. Either way, take profits were hit all along the way with our stop loss getting moved into profit at break even all along, okay? It's pretty simple, okay, right? We look for a sweep of liquidity, and then what is a break of structure? It's a close below a low, okay? So for something like this, move up, move down, move up, move up, move down, move up, move down, move up, move down. Do we see any closure below these lows? No, not until this candle closes below this low, okay? Then, right, obviously there wasn't a liquidity sweep here, but I'm just spitballing, okay, for another example, okay? Oops. Okay, we get a closure below here, okay? What are we looking for? Fair value gap, okay? This is our first one. Does it get hit? No, okay, so are we probably going to take it purely off the break of structure? Sure. Okay, take it off that, or we can just wait for a fair value gap to form. Does any form within here? No, because there wasn't a sweep of liquidity, okay? So the move's not going to be volatile enough to make a liquidity void. Okay, but that's how you find break of structure and how to use it to find bias on daily time frame. Oh yeah, let me show you the fair value gap that I was talking about first, just so you know I wasn't lying. Okay, this is the fair value gap. Boom. From here up to I believe it was right here, right? It hit our 50% mark and then bounced up, right? Or you could do it the other way like this, right? Same thing. Completely filled the fair value gap and then pushed up. Okay, so that's how we can use break of structure on the weekly, the daily, the 4 hour, the 1 hour, every single time frame to help us know where price is going to go, okay? Something I would like to add at the end of this video. I know it's getting long. That's what she said. When you get a break of structure on the daily time frame, what does that often mean? It means a retracement on the weekly. When we get a break of structure on the 4 hour time frame, right? Like for this one, for example, we break structure right here. What is it doing? It's making a daily low. Okay, so what do we do? What do we do to get confirmation that the daily low has been formed and we're moving back up? Simple. Look for break of structure on the lower time frame. Okay, we break structure on the 4 hour to the downside. Okay, what does that mean? Daily low, right? That's what it is, okay? Break structure back to the upside, what does that mean? Continuation, okay? On the 4 hour, okay, if we see, on the 1 hour, if we see break of structure to the upside or to the downside, what does that mean? It probably means we're making a 4 hour low or a 4 hour high if we're breaking to the upside, right? And 4 hour lows and 4 hour highs, okay, those can give us bias on what the daily is going to do. Okay, same thing with 30-minute, 15-minute, right? The 15-minute shows retracements on the 1 hour. The 1 hour shows retracements on the 4 hour. 4 hour shows retracements on the daily. Daily shows retracements on the weekly. Okay, all of this, it's the same price data. That's why I hate when people say, what's the best time frame to spot liquidity? And where's the best trade entry off of the best time frame? Like, dude, there's no best time frame because it's the same price action. It's just shown with different candlesticks, okay? We're able to scale down on the 30-minute, right? We see break of structure on the 30-minute. Okay, we're probably making a 1 hour retrace, okay? We ended up breaking structure on the 1 hour. Now what are we looking for? 4 hour retrace. We break structure on the 4 hour. What are we looking for? Daily retrace. We break structure on the daily. What are we looking for? Weekly retrace, okay? It's all a part of the one big trend, right? We break structure on the weekly. What are we looking for? Monthly retrace, okay? I spit all over my screen when I was trying to pretend to talk like you guys, okay? But do you understand what I'm saying, right? Weekly, okay? Let's look. Do we get a break of structure right here? Yes. What are we looking for? Monthly. Okay, retracement, boom, perfect, move down. All right, whoa. Weekly, right, break of structure. Daily, okay, start breaking structure to the upside. What is it? Weekly retracement, okay? Break of structure to the upside, weekly retracement, Okay, break of structure down, continue. Okay, it's very, very simple. All right, and hopefully you guys are able to take this information in, use it to your advantage, and put it to work, okay? I don't want you guys just using break of structure, just using liquidity sweep, just using fair value gap, okay? What do we use? We use all of them together to give us bias in the market, right? We use liquidity sweep, so we know we're going to have volume and volatility in the market. Then we look for break of structure for confirmation that the market structure is changing, okay? Then we look for a fair value gap for a prime entry, okay? Because we know price is going to return and fill in that gap, okay? It's quite simple, really. Once you get away with all of the noise and the distractions of your indicators and all of that garbage, this thing gets really freaking easy, really freaking quick, okay? That's it for today. Break of structures broken down by TJR trades, all right? That's it. I appreciate you guys. I'll catch you in the next video on Equilibrium. Peace.